Hello everyone, welcome to Lbank Academy. In this video, I'm gonna sharing most powerful chart pattern used by professional traders. So let's start. So today's topic is mastering chart patterns in crypto trading, forex trading, or overall financial market. So most traders lose money not because the market is random, but because they don't understand what the chart is telling them. So today I'll show how price leaves clear sign before big moves, right? So by the end of this video, you will know what chart pattern really mean and which pattern are most reliable and how to trade them correctly. So most traders have common mistakes, like how they make mistakes I'm gonna sharing you in this video. So on the screen, as you can see, there is have three types of chart pattern. So one is called the reversal pattern, one is continuation pattern, and one is bilateral, or you can say neutral pattern. So how chart pattern basically works? So chart pattern is repeating the price structure formed by market psychology, buyer and seller behavior, and from liquidity and momentum, because price never moves randomly. So it moves because buyer and seller, like, they are doing fight, and chart pattern shows us who is winning, buyer or seller. So that's why there is have three types of chart pattern: reversal, continuation, and bilateral or neutral chart pattern. So now let's break them one by one, how we can trade in the reversal pattern, because there is have different name: double top, head and shoulder, rising wedge, falling wedge, double bottom, inverse head and shoulder. So how we can trade? As we can see here, so this is neckline. What is neckline? Entry. Okay, how I can take entry? So what time should I take entry? Stop loss, where should put my stop loss, and what will be the target? So these all are the things we have to understand is very clearly, otherwise it will never works, like I cannot win the trade. So this is double top pattern. So okay, now as you can see, this is double top. So okay, like market is going up, higher high, higher low, higher high, higher low, higher high, higher low. So this is the uptrend pattern. Uptrend, market is going up. So now what it can be happened? So it will go down, then again it will go up. So it means, like, as we can see, it rejecting the price. So this is the resistance level, as we can say. So now this is two top. So now it is going down. So now what's going to happen? This is the support. So this is the support zone. As we can say, this is the support zone. Now it looks like this is the double top. Or we see, so you can see on the again. So this is, it looks like a double top, but this is the, or you can say, M pattern. But how I'm gonna trade? How I can get the confirmation? This is the main point, how we can trade. So now, so neckline means this is the neckline. This support is the neckline. This is the top. So top 1 and top 2, double top. So this is neckline. So now neckline should break down first, because without breaking the neckline, so we cannot say this is the, without breaking neckline, this is the reversal pattern. So now neckline break down. So now we can see this is the break, then retesting. So break down and break, right? Then retest. So we can get one confirmation of, like, here. So continuation for like getting the entry point. So example, this is the bearish engulfing candle. So and we can take the entry here, and we can put a stop loss above this candle and take profit. Where I can put my TP? Okay, here. But what is the reason behind that? How I can put my take profit? So I can put take profit. So how many pips from neckline to top? So from here to TP same. So this is my take profit zone. And we can see if I draw, so this is the pattern trend line breakout as well. So many powerful setup, this one. So that means this is the reversal pattern. So double top. So same, this is the head and shoulder. There is have also neckline, entry, stop loss, both are there. Rising waves also. So rising waves, how we can get the trading opportunity. So as we can see, we can remove this one, so it will be much better. So okay, rising waves. Now market is going up. So after that, how rising waves, the picture. So this one like that. So actually it's look like another pattern also, I will tell you later. So now same like this, say for example like this market, if breakout here, so this is the rising waves pattern, so this is the reversal pattern. So how many pips we can put the take profit same way from here to here, how many pips it will show. We have to measure the price, so after that we can put the take profit here. So this is the entry, stop loss above the previous high or previous candle. So head and shoulder, rising waves. So these all are the uptrend reversal. But what about the double bottom? What about the inverse head and shoulder? So it means this is the price is going up. So after that market is went so much up. So we can find one the reversal pattern. So we can, after breakout this neckline, we can get the take the opportunity and we can entry that trade. And how about the downtrend? Okay, this one like this. So that means this is the double bottom. So and this is the neckline. So neckline breakout. So then retest, then buy. So it means you can say this is the pullback and retesting. We have to get one confirmation bullish, buy, stop loss here, and from neckline to bottom. So bottom 1, bottom 2. So how many pips from here? So we can get the take profit is here. So this is our take profit area. So these all are the reversal pattern. Either is downtrend reversal or uptrend reversal. So let's talk about neckline and head and shoulder also same as it is. Head and shoulder, how it can trade, how we can find the entry exit. So let's we try to find the exit and entry. So okay, market is going down. So this is left shoulder, then this is the resistance, then it will go down again. So then like this. So now this is the neckline. So it means this is the left shoulder, right, this is left, this is right, and this one is the head. So inverse head and shoulder, and this is the neckline. So neckline should break out. So breakout done, retested done. So find one bullish confirmation, buy. So this is the neckline to head, how many pips? So our take profit will be here. So this is the entry, stop loss below this candle, and take profit this one. This is the TP. So this is the reversal inverse head and shoulder, how we can get the entry. So this is all about the reversal pattern. So actually reversal means buyer, if price is going up, uptrend reversal, so buyer are getting weak. If it is going down, so downtrend seller are getting weak. So that's why smart money is distributing the position. So normal formula, how to trade: wait for neckline breakout, enter on pullback or retesting, stop loss above the right shoulder or below the left right shoulder, and target height of head to neckline or bottom to neckline. So this is the measurement we can keep the target. But common mistakes traders are doing: entering before neckline breakout. Sometimes it break out, then again it's going down. So that means that this is called fake breakout, stop hunting, liquidity taking, liquidity guard. So don't do mistake, don't enter in the trade before break out the neckline. So same also in selling side, seller are exhausted, buyer are taking control. So right, and after neckline breakout or retesting of neckline, we're gonna trade. And double top, double bottom, same price fall twice at resistance and a strong sign of bearish reversal once price is going up. This is the double top. And what about the double bottom? Price fails twice at support level and a strong bullish reversal. So always, tips is always wait for confirmation candle, either bearish or either bullish candle. So now we wanna talk about the continuation pattern: falling wedge, bullish rectangle, bullish pennant, rising wedge, bearish rectangle, bearish pennant. Then after that we wanna talk about the bilateral patterns. So let's start on the screen. This is the falling wedge or bullish flag pattern. Okay, so how bullish flag pattern basically work? I can show on the chart one bullish flag pattern is there. So let's see the well here. So market is making a high. So this is the bullish flag pattern. So now this pattern is, this is the neckline breakout here, and then retest it. We can take the entry here. We can put stop loss below this position. Say for example here. So okay, buy here and put stop loss below this previous low like this, or rejected. So we can put here stop loss, and how many pips our take profit. So take profit will be like here, but maybe it will go more. So from here entry to here. So this is our take profit. So this is our take profit. Take profit hit, close the trade. Don't wait, it will go up more. It's okay later. So we can find another entry zone. So if example here also another entry. This is also pattern. So this is the bullish continuation pattern. So we can find this way. So now let's see on the screen. So should remove this first. So already I showed on the real time chart. So example, market is going down. So then here is like this. So this is the bearish flag, breakout, retest, entry. So from here to here, how many pips? So we can put after taking entry. This is our take profit. Breakout here, retested, done. Confirmation bearish candle, entry, stop loss above the previous high. So same way how bullish market is going up, then like this. So like that, then this is the flag and breakout here. Then we're gonna get the opportunity. So here, so retest, then buy. So this is the bullish and bearish flag. So staying strong upward, impulsive move, small pullback, and continuation to the upside. And how about the bearish flag? Strong downward impulsive move and small consolidation and continue to the downside. So all the pattern based on our time frame, based on our trading strategy, we can find 5 minutes, 15 minutes, 1 hour, daily, weekly, whatever. This is all of the continuation pattern. There is a pennant pattern, so it's look like a small triangle after a strong move. Pennant pattern is small move, and also looks like the small triangle, correct? This one is small triangle. So market is testing before next push. So market is retesting before next push, right? So breakout in direction of trend. So this is the entry level, and rectangle pattern also is there. So this is the price moves the between support and resistance. So this is like this one, bullish we are talking about, rectangle pattern. And also trading option, buy low, sell high. So range trading. So trade breakout with volume, avoid over trading inside the range. Most common mistakes of every trader. And now we wanna talk about the bilateral patterns, or as we can say the neutral pattern as well. So basically this pattern can break either side, both side, either upside or downside. So that's why we have to wait to get confirmation, because ascending triangle is a bullish, descending triangle it is bearish, correct? And symmetrical triangle is the neutral pattern. Symmetrical is the neutral, fully neutral pattern. So never predict Okay, maybe, never, don't do that. React to the breakout, okay? Because OS pattern, OSing bearish, OSing falling OS bullish, correct? Here, OS pattern, this one, falling OS bullish, bearish. Falling OS bullish also is their BTC. Right now is testing that area, so we don't know what's going to happen and how to confirm the chart pattern, right? So never trade pattern alone, so always we need to get the confirmation. We have to use support resistance area, we have to find the support resistance zone, then volume, we can use volume. If you use the indicator, some tools, you can get more confirmation. Market structure, you can find like breakup structure, change of character, support breakout, resistance breakout, and then you can take about the liquidity sweeping area. So best result come from the confluence, not guessing. So we need to more confirmation, because every trader doing same mistake, entering before confirmation, ignoring trend direction, no stop loss. There is no stop loss like that, no stop loss. Okay, guessing, overconfidence, like after winning some 2, 3, 4, 5 trades, overconfidence, and trading every pattern. You see every pattern, okay, what the confirmation pattern breakout is okay, no problem. So don't do trade on every pattern is tradable, okay? So we have to wait to get the confirmation pattern breakout, otherwise it's gonna lose the trade. Now we're gonna talk about this one pattern, so how we can use. So this is the asymmetrical triangle. Symmetrical is the neutral pattern, ascending is the bullish. So breakout, if there is a breakout, then we can get the trading opportunity. So symmetrical triangle is showing like this, right? So if break here, it will go up. If break down, so it will go down. So that means this is the neutral pattern. This is the neutral pattern. Symmetrical is the neutral pattern. And ascending triangle, market is going up, then moving like this, like this, like this, right? So then once breakout, retested, take the entry. So this is the neutral pattern. So we are end of the video. So chart pattern are tools, it's not a magic. So master with patient, discipline and risk management, otherwise it's very difficult to consistency to get the consistent in this market. Trade smart and trade with discipline. If you found value in this video, please don't forget to subscribe, like and share. Happy trading.